Okay, talking about SolarEdge, SEDG on NASDAQ. This isn't going to be a great report. We had some issues with it. We've liked it. You go look at our videos. We're quite bullish on it, and things are not going according to plan. Doesn't mean we're entirely going to give up on it or anything like that, but sometimes you got to reassess, and that's what we're doing here. And I'm not thrilled. Some of the results aren't great, and I think long run actually it's probably pretty good, and we'll probably be fine. But there's some short-term concerns, and there's some valuation concerns for the short run. And stocks are very liquid, so you can get out of this and do something else if you want for the time being. Not that we recommend turning over your portfolio or anything like that. In fact, we're pretty much long-term buy and hold. But if things are going to be kind of rough, and you got other ideas that are equally as good or better, you might as well go. So we're really internally debating this right now, and I'll kind of frame it for you and help you make your decision on it. I said short term, some of the results have been weak. The guidance isn't that great going forward for the next quarter, and it's how long do you wait for that long term? So let's dive in. Let's look at it first of all in our model, and you'll see right away that the valuation looks really rich. But let's not jump to conclusions here. Let's analyze this a little bit more in depth. So great rates of return here, phenomenal. We love that. 19, 20, 16, 17, 18, and then boom, it just plummeted to 9% in 2020. Okay, some of that's COVID, so that's fair. We understand that. Also, this is when you definitely have to look at the capital growth too. So while they're getting these huge returns, they've been putting more and more capital. So more capital and still getting that rate of return. That's a really good sign. Clearly, the 9% drop, or the drop to 9%, is a concern. Let's take a look at the financials more directly and see what we see there. And you see back in 2019, 43% growth, 73, 58, and then all of a sudden June quarter hits, there's COVID issues, 2% growth, minus 17, minus 14, EBITDA is way down, and I think the company's been given a bit of a pass because of COVID. And we went along with that and said, okay, that's fine, because you can certainly say, all right, let's just assume that's a COVID issue. Let's keep growing the company. Let's get back to earning 20% return in a few years, and that's what this scenario is. So put in 20 there, and okay, it's worth 320. I think it was trading at that kind of at its high, and a reasonable thing to do. But I don't know that it's going to go that smoothly back to normal or back to growth. Certainly based on this next quarter's guidance, this is where we're starting to get the nervousness, is we're just looking at Q1, this was the Q4 report guidance for Q1. Okay, revenues to be within the range of 385 million to 405 million. Okay, all right, and then pretty decent gross margins, 34 to 36. That's kind of their historical range, so that's fine. That's normal. But again, let's go back to these financial statements and just look when was revenue 385 to 405. Well, that was 2019. June 2019, it was 410 million. They're not even guiding for 2019 for Q1. Now, there's still some COVID, there's still some issues, and there's still some reasons to say, okay, we'll give you a bit of a pass. But, if this doesn't get back to, 400 million a quarter or higher, even it has to go higher. It has to, based on, we can see our projections. Look at how much growth we're putting in and a good rate of return. This is growing the EBITDA significantly to get to 320. Whereas the guidance is, basically flat or even a little lower. And okay, as I said, I think I'm saying this ad nauseum, there's some COVID issues. Let's just look at the multiple though. EV EBITDA right now is 76. This is after the stock has come down. So it was a growth stock. You pay up for that. You have a high EV EBITDA multiple in that scenario, but we know next quarter is not going to be high growth. We know. The market gets that. The market, is not acting very well with this stock right now. So, listen, I'm going to wrap it up. Long term, probably okay. Short, medium term, I'm definitely nervous. The quarter comes out on May 3rd. If they hit towards the top end, we'll probably be okay. If it kind of comes in the bottom end, I don't know, man. I don't think the stock will do too well. So, not the greatest report I have for you there, but it is what it is, and you got to know the situation.